Hi guys, and welcome back to our stock analysis video on the stock MANU, Manchester United. So let's look at this stock. Why is it going up? Why does it keep on going up? And what is next? Before we do that, we did talk about this stock last week, and we also caught a nice trade in it. So MANU ended at 16.75. Stop loss is 15.3, meaning fit 15.3. Sell all my shares for a loss because I think it's going to come down lower towards 14 and 13, etc. So sell for a loss, protecting my capital. It never happened. So it hit my first target of 18.2 for around plus 8% alongside my reasonings here. And as you can see, on the 13th I entered, and the 15th I sold right here around 18.3. It was the filling. It's not bad. But anyway, looking at the chart now, just structurally. So we're going to talk about the chart structurally, and then some fundamentals and what we actually need for the good news. So basically, we're coming now towards 19.5 to 20.5 in my opinion, which is good because around the 24th of June, the speculation, not the action, speculation was priced in of a consortium bid being prepared, and people seeing that the drag along clause is coming into effect, so people can get the bids ready and get prepared to see what the Glazers are open to in terms of a sale, maybe doing Sir Jim Ratcliffe over with that sort of clause. And my private sort of valuation was measured at around $19 because it's measured 2 months before. So that drag along clause came into effect in August, and this sort of private valuation of that was in basically the end of June, we'll call it 24th of June, of $19, saying, yeah, we're aware of this drag along clause, and if there were to be speculation, not an action, just speculation of people seeing that, very rich people seeing that and maybe getting a bid together, we value that to be at $19. The price of stock should be valued $19 considering that information. Not the action, just speculation. The price of stock should be valued at $19 based off the speculation of that potentially happening. That's basically what the insider price was, and now we've technically broken out. And yeah, we're slowly getting towards that sort of marrying price point. It's never going to be perfect. I measure it around 19. It's 19.5, to be honest. So we're coming towards that, really. Now it's public knowledge. We're marrying that price valuation of the private sort of situation here before it's public knowledge. So it's good. It's good. There is something in it, as you can see. So now we are coming towards 19.5 to 20.5 in my opinion, just structurally off the chart. The reason being is because we've broken out, we're continuing up, and 20 is my next resistance. And that basically means 20 is the next price point we should magnetize towards to. But in trading, there's no such thing as a flat definitive price point in my opinion. A flat definitive price point, there's no such thing. It's more thought of as a confluence and a zone of price. So I allow for 2.5% either way, just to cover myself. So for instance, if you're looking at 20 to sell, for instance, sometimes it can hit 19.5 and then come back down, and then you're screwed without selling. So that's around 2.5%. So I always allow for 2.5% just to mitigate against any of that possibility. And the same here, if you're looking to continue and get a new position because it's broken a strong level, you think it's going to continue going up, you need to wait for it to break plus 2.5%, it's 20.5, to know that it's strong enough. It's not just a little bit of a fake move to try and trick you. So I'll have 2.5% either way, and basically that means, off the original setup here that we took, a bit lower, we're coming towards 19.5, 20.5 off the chart, in my opinion. So just go to the weekly time frame now. Like I say, the speculation pricing is around $19, isn't it? So we need more than speculation. We need concrete stuff now. So we need to get above 20, really, because that's the next resistance. So it's still speculation until we break 20. Nothing concrete will happen until we break 20. I'm telling you now. Because like I say, speculation was priced in here. So zooming out, showing you my new setup, we need to get above 20 because that's the next level. We don't really have too much resistance in between here. Maybe 22 might have a bit of a stumbling block, just naturally. But we should come towards 25. If we break 20 and comes towards 25, then you're talking good stuff. So just to show you my setup now, it's in a weekly falling wedge, which means these candles are made on weeks. So each little bar here is made within 5 days. So you can imagine, it starts around, you can argue, 2022. And it's a big pattern here. We're in end of 2025 now, October. So yeah, it's a long time. However, it doesn't mean it's going to take as long to break out. Once the bigger the pattern, the bigger the breakout typically. And you see here how we just jumped around, I think it's plus 40%, or not even that, plus 70% in 2 weeks. This stock is capable of moving. And then typically, once it breaks out, which has done now, it's broken out of the wedge, as you can see. First candle outside of it, which is green, which is good. and strong. Expect it to come towards generally the top structurally, similar to what we spoke about in the previous video, how that 18 to 19 level was the top of the wedge, around there, from our previous one that we drew. It came there and it's coming towards there even further. Now we look at the weekly now, and you expect it to come towards here, which is really good. But we need to go over 20. It means nothing if we get over 20, because that's a massive stumbling block, 20. So we need to go over 20, and if we get over 20, you will start to see a lot more concrete stuff coming to play. And because if we break 20, we're coming towards 25, in my opinion, because there's not much in between here to say that it's going to stop going up in this range between 20 and 25. So before we look into it any more further though, I just want to mention how the all-time high in this stock is 27.34, and Sir Jim Ratcliffe paid $33 a share. So the stock doesn't actually need to go to 33 on the chart, because the all-time high is 27.34. So, you know, he paid 33 when it went up to 27.34. So to our knowledge, he basically paid a plus 20% overvaluation of the New York Stock Exchange price on there. So if you come up towards 26, 27, someone can pay 25, 30% over and marry that price if they want to, saying, you know, we're coming up to 26 now, you know, we're undervalued by 25%, so I'm happy to pay 33 and match that. And obviously you're more likely to do that than all the way down here. So that's 20% he overpaid for. So, you know, got to think about this common sense, guys. You know, if someone was going to really buy now, they'd be buying over 75% from the current price point. They're buying overvaluation of 75%. It's ridiculous. No one's going to do that. No businessman would do that ever. It's crazy. They wouldn't do that. So that's why we need to get towards these sort of levels around here. So between 26, 27, we need to come towards. And structurally on the chart, how do we do that? So as you can see, we've broken up the wedge here. Typically, structurally, the top of the wedge is the first target, and you do expect to come towards there, which is around 26 to 27, which is good. However, it means nothing if we can't go over 20. That is the main stumbling block. If we go over 20, we do come towards 24, 25, 26, in my opinion. And that's when you start to see, you know, a real possibility of this, you know, being something proper. A restructuring of the ownership, whether that's a majority shareholder or not. I'm talking proper. This is all we can work with. The price, the high on the chart is 27.34, and he bought for $33 a share. So what we can say is, after what we know from looking at the chart, is he paid 20% over. We need to come to around this level, 26, 27, for a new person to come in and not feel ripped off and pay 20, 25% over the price point to marry what Sir Jim Ratcliffe paid for. That's all we need. You know, it's $33. And the Glazers, they can sell it without Jim Ratcliffe having to say anything by February 2027. That is the reality. And we will probably do that by that point. We will definitely do that if we go over 20. I'm telling you now, we will definitely come towards 24, 25, 26, 27 if we get over 20 by February 2027. At 100%, I'm telling you, from all my experience and just looking at this structurally. And again, you know, looking in, zooming in, and just, you know, revisiting last video, we spoke about how this is a private sort of pricing in this wick here around $19 of any speculation coming to fruition. And now we're coming around here, 19, we're slowly coming towards there. Now it's public knowledge. And think of it like this, guys. This over here, 27.34, 26, 27, around here. So this was also the private valuation and public pricing of someone actually buying the club, wasn't it? And it's the first time we've seen the Glazers sell some of the club. So, you know, if we come to that point again, then we're meeting that valuation point, and it's probably going to happen again. So in a nutshell, so we're going to come towards 19.5 to 20, I think, by the 31st of October. And then, you know, once we do that, we need to reassess, probably have a cooling off period for a couple of weeks or something. And then once we get above 20 properly, so basically, you know, think of that 2.5% sort of band. When we get above, let's measure this properly. So I'm going to type in 20 here. And then 2.5%. Let's be honest, if we get above 20, give ourselves some more cover. If we get above 20.6, I would say, yeah, 3% is fine, just to be safe. If we get above 20.6, then you're going to start seeing more proper news come out about a proper takeover, proper bid being made, not just speculation. There's going to be more concrete talks, and yeah, you're going to start seeing lots of momentum towards that. If you get above 20.6, in my opinion. But again, it's one step at a time, guys. So in terms of technicals, that's all I have to say really. Ultimately, if we get over 20.6, we will see this news ramp up a lot. And it won't just be speculation from The Guardian. it will be talks are advancing, Bloomberg getting involved, etc. And if we get towards 26, 27, we will be close to a restructure, whether that's majority shareholder or whatever. We will be really, really close to it happening. I think personally it's going to be likely if we get over that 20.6 level, honestly. I'd personally try and don't get my hopes up, as I don't expect anything to change, but technicals don't lie. If we get over 20 and 20.6, then we're coming towards that 26, 27 valuation, and that is the all-time high, and that is a 20% difference point ultimately from what Ratcliffe paid for. So why wouldn't anyone put a bid in? It'd be a fair value, in my opinion. And also one thing I do want to mention is that Ben Jacobs, he's a really good journalist, but one thing he did tweet was saying that Turki Al-Sheikh, when the first tweet went out, there was no reaction from the stock market at all. That wasn't true. There was no reaction from the stock market generally, but from the actual stock MANU, I took this trade, as you saw in the Discord, I took this trade based off the tweet, and that public knowledge of the valuation being met that we've spoken about. So that was a load of rubbish, in my opinion. But he is generally good, I would say. So let me know what you think, guys. Hope it all made sense. Keep an eye out on those levels, 20.6, etc. And remember, it does take time. And before the Summer World Cup or February 2027, that is still fine. So it does look good and things do look bright just if we get over that 20.6 level. So thanks for watching, guys. Hope it was good and catch you all later.